Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Nexus Wealth Management, and although my black eye from jiu-jitsu this weekend has me looking like I got punched in the face,
Why don't you punch me in the face? Oh!
I'm still here today ready to give you your market recap for the month of January. So let's jump in. Overall, January was a positive month with solid resilience inside of broadening participation across sectors. The S&P was up 2.8%, the Dow saw a robust gain of 4.8%, and the Nasdaq rose 1.7%, positioning US equities near all-time highs, reminding us of the market's underlying strength. As far as positive factors last month, these three things really stood out. First was continued momentum in tech driven by AI and chip sector strength. Early in the month, we saw gains in semiconductors, lifting broader confidence and supporting tech related stocks that power so much of our daily lives and economy. This helped drive record closes in major indexes at points and showed investors boosts from innovation. Second was positive momentum from a rotation into value, industrials, and small cap stocks. We saw returns broaden beyond mega tech companies, with cyclicals and smaller companies catching up and even outperforming in certain stretches. This is great for diversification and signals healthier market participation for everyday investors. And finally, we saw resilient economic signals overall. This included stabilizing jobs data and expectations for a measured Fed policy. These signals bolstered confidence that growth could stay steady without major disruptions, giving households more breathing room to plan ahead. Now, on the flip side, there were a few things that left the market with a few black eyes. See what I did there? First were mixed reactions to the Fed's decisions on rate outlook at the end of the month. Now, on the flip side, there were a few things that left the market with a few black eyes. See what I did there? First were mixed reactions to the Fed's decisions and rate outlook at the end of the month, with the Fed's 10-2 vote to hold rates steady instead of lowering them, as well as signaling caution on cuts due to lingering inflation. Some expressed caution, specifically in growth stocks, but this is totally normal as markets digest policy paths, and as seen by the robust growth last month, it didn't derail the month's net progress. Second were continued concerns over earnings volatility in big tech and software companies. Some reports have recently highlighted heavy AI spending without immediate payoffs, causing pullbacks in select names. Yet the broader market shrugged it off, showing resilience and rotation to other areas. And third, we have to continue to factor in ongoing tariff and policy uncertainty, which is always creating some chop in certain sectors. However, this has been the norm since President Trump took office and has not put any lasting pressure on the markets overall. At this point, tariffs are more of a potential issue if something drastic happens versus any real threat to the growth we're seeing. Guys, it's crazy to think we're already through the first month of 2026. Whether you're a busy professional, a mom balancing career and home, or just want a fresh set of eyes on your personal finances or company's 401k plan, reach out. My team at Nexus would love to help you build a plan that lets you thrive with more confidence. Drop me a message anytime. Thank you for watching. We'll see you on Wednesday with our economic outlook. Take care.